Hello everyone, here Chris Capri, founder of Second Skies. Today we're going to talk about price action and some of the various aspects regarding price action and how to understand and how we can interpret these things here to give us ideas as to where the market is heading. Today's subject actually is going to be on impulsive versus corrective moves. So impulsive versus corrective, it's actually something that kind of originated out of Elliott wave theory. One of the kind of wisdom gems that did come out of Elliott wave theory was the impulsive versus corrective. So what is an impulsive move? It's a move where it's very strong, it's very powerful, it's quick, it's fast. They're usually the larger candles in the entire series of candles, no matter what time frame you're looking at. It also means that it's generally overly bullish or overly bearish, meaning a lot of candles in a particular order. There's just a lot more of them. So it's either heavily bullish or heavily bearish, and this is what we're talking about. We'll go over some chart examples. Corrective is when it's not as convincing a move. They're smaller candles, they're not fast by any means, or not a fast moving market, and they're usually smaller than everything else across the board. So whatever the normal candles are, they're generally a lot smaller, suggested that the volume or order flow is not really behind it. Impulsive moves generally are followed by corrective continuation moves, which usually signal, hey, the market's going to continue in that direction. So unless we see some sort of difference in the price action, we see usually a continuation in the same direction. Let's take a look at a couple examples of this. We're going to pick on the CAD here for a little bit. So this is a dollar CAD. It had a nice little double top coming up against 102.25. And the candles are not huge, but then all of a sudden one candle gets ginormous here. So this one candle is over 50 pips large. It's about 50 pips, and yet it took how many other candles? 6 candles just to get up to it, and this is on an hourly chart. So this is an impulsive candle here, and it follows up with more impulsive candles. Now this move is about 150 pips large within 6 candles, 6 hours worth of price action, and look at the ensuing price action after that. 4 hours only bounces about 50 pips, but yet 6 hours goes, 150? So this is, you can see impulsive order flow, heavy order flow behind it, and this is corrective here. Giving you another example here is an Aussie CAD. So it had a similar move today where we had, some small candles leading up to it, and then boom, the candles get really large, and 5 hours of selling is a total rate here of about 100 pips, and yet 3 hours of buying, half that time, instead of it being 50 pips worth of movement, it was only a whopping, maybe 35. So you can see impulsive versus a corrective move. One other recent example last week was the dollar yen. We kind of had some small candles leading up towards the 108.10 area, and then all of a sudden the candles start to get much larger and they're much more consistent. Now this move right here is also about 170 pips from top to bottom, and it's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 candles. But then look at this move: 3, 6, 9, 10, 11 candles going 50 pips, and yet 11 candles just as much time going 150 pips or 170 pips. So totally different, impulsive versus corrective, and then the pair continues on in the same direction. Now let's kind of talk about some methods that we can use to trade this here. One of my favorites is really when I see an impulsive move followed by a corrective move, I like to pull up a fib from the top of the move to the bottom move for a downtrend here and see if it runs into a fib. If the momentum is a little bit lackluster behind it, so it's not diverging by any means, along with a MACD histogram, then I like to get in right around the fib or as close to the fib as I possibly can. My first target is usually the retracement of the move here back to the end of the move here, and then I will look for the extension. So if it's at the 38.2 and bounces there, I'll look to get in at the 138.2. Now same thing here, Aussie CAD showing a very similar move here. So we have a nice impulsive 100 pip move, little retracement right to the fib, and then the pair automatically goes down to the full length of the move here. So, booking profits here is a good 40 pips in only a couple hours here. Again, lackluster momentum and histogram MACD. Now this one was a little bit different because the momentum was actually quite strong leading up to it. So it didn't have the lackluster momentum, but you could feel pretty confident that when you have 11 hours of selling at 170 pips and 11 hours of buying at only 50 pips, the probabilities of the next move going down are very, very high. Also, with the really high momentum in comparison to previous momentum readings, it was suggestive it wouldn't be able to get much higher here. So this is one of those, even though the momentum wasn't totally lackluster here, the price action alone was suggestive the next move is down. And look exactly what happened. Boom, it makes not only the retracement back to the end of the first move, but then goes to the 138.2 extension like it should have. So 38.2 should go to the 138.2 here. And that's exactly what had happened. To summarize things up here, impulsive moves are supported by heavy order flow. This is what we like. The big players is what moves the market, and so since we don't move the market, we have to be able to identify what are the types of moves that they're in. And the moves that they're in are generally characterized by impulsive moves. So we like to get down on these waves here because these are the big players that move in the market. The more money and players that are on the side of our move, the better the chances our move is going to be nicely profitable. Thus, it's very important to be able to identify impulsive versus corrective. So if you can identify which are the moves that are very heavy in one particular direction, if they're followed by a corrective move and running into some sort of pivot or fib or anything like that, then look to take the move in the same direction there. It's very important that you're not going against or trying to buy into an impulsive move while it's in progress there. It means the order flow is not going to be in your favor there. And so again, also look for fib retracements, lackluster momentum, or a MACD histogram there to follow up these moves, which usually suggest, hey, after this corrective series is over, the big orders are going to come back in and take this at the fib or pivot level on into the next direction there, continuing in the same direction as the original impulsive move. In terms of our services, we specialize in private education and mentoring. Every single month I take on a handful of traders and I pour a ton of energy into them, give them the same proprietary methods and systems that I trade with on a day-to-day basis. I usually take them on a 1-month basis, and usually inside 1 month I'm able to take any trader and make them profitable inside of 1 month. Mostly because you're getting a ton of energy and information from me, but you're also getting the same systems that I use on a day-to-day basis. For those of you that are looking for a systematic way to trade, we have the Sniper system here. It's been incredibly powerful and accurate. I'm adding new systems to it all the time. I now have 2 pound yen systems, and the system itself has actually done more pips in the first half of the year than I did all of last year. So it's a very, very powerful system. It's a great way to no longer have to do research or analyzation or anything. All you have to do is just understand the signals. If you got a signal, you trade. If you don't, you walk away. Makes trading as simple as possible and reduces the emotional aspect out of it as well. And for those of you that are looking for live market webinars, analysis, and trade signals, I give those on a daily, weekly basis based on all my proprietary systems. So for those of you that are interested in any of these services, don't hesitate to email me info@2ndskies.com or visit our website www.2ndskies.com. Good hunting, everyone.